and welcome in this tutorial on how to use the stock analysis financial model template. In this video, I will give you an overview of what you can expect to find after purchasing one of this set of templates. So let's start with the goal of these kind of templates. The goal of these kind of templates is to provide you a tool to analyze fundamentally the stock of a certain company. So basically try to understand how the company is performing and trying to forecast its future evaluation and earning per share. So the first tab that you will encounter is a color coding tab, giving you an overview of the type of color code that you can find within the spreadsheet. After that, we have a company profile. So for in this example, for the Google stock Alphabet, with basic company profile information like the headquarter address, the city, country, reporting currency, company description, number of employees, the company website, risk-free rate, dividend yield, the analyst price target range with the high, low, and mean, and with the median as well, earning per share forecast with the number of estimates, and then the high, low, and mean consensus. Same for revenues, net income, EBITDA, and EBIT. Next tab, historical price data. So you can see starting from the 1st of January 2020 up until end of December 2024, you can find the open price, high price, low price, and close price of the stock, and also the amount of stocks traded during that day. Next tab, dividends data. So the dividend history of the company. In this case, we just have 3 data points because Alphabet just started paying out dividends in 2024. So we have 3 data points with the declaration date, record date, actual pay date, and then the amount, adjusted amount, and then the currency. Then we have the quarterly financial data and then the annual financial data. We have the 3 statements. We have the income statement, the balance sheet, and the cash flow statement. We have data for the past 40 quarters. So going from Q4 of 2014 up until Q3 2024. Of course, this will be updated as we go. So as soon as Q4 2024 will be released, you will find that in the model as well. And you have all the information that you can expect to find within the income statement, like total revenues, gross profit, operating expenses, R&D, selling general administrative expenses, and so on. Net income in a balance sheet as well. So cash and short-term investments, total current assets, total non-current assets, current liabilities, non-current liabilities, equity, total debt, net debt, and so on. And then the cash flow statements with, of course, the cash from operating activities, cash from investing activities, and cash from financing activities with the net change in cash. And then free cash flow and diluted earning per share. And then historical data. So same type of data, just grouped by year instead of by quarter. And we provide the last 5 full years. So in this case, it reaches only 2023 because, of course, at the time of the recording of this video, it's December 2024. And so we don't have Q4 2024 yet. As soon as it will be available, it will be included in the model and the data will start from 2020. So that we have 5 full years. Then next tab is the ratio analysis. So you will find several ratios that analyze the company, in this case, Google, both annually and quarterly. We have several types of financial ratios. We have efficiency ratios, like working capital turnover, days sales outstanding, days payable outstanding, and so on. Profitability ratios, liquidity ratios, solvency ratios, and then growth ratios, so that to provide an holistic overview of the company. Next tab is the same thing, but instead of numbers and tables, charts. So you can find the same metrics across the same set of financial ratios, but in charts, so that to provide a visual representation of how the company is performing against a certain metric. And then the final 2 tabs are the earning per share projection, where you can give your estimates about how you expect, for example, the revenues to grow. If you expect the revenues to grow in the next 5 years at a rate of 6% per annum, sorry, not 600, of course, just 6%, the data will be updated. This is actual data, 2023 is actual data. Then cost of revenues, maybe you expect them to increase, but at a lower pace than revenues. Selling general administrative 1%, R&D, let's do 2%, and then the rest you expect to remain at the same level. So other operating expenses, net interest income, and so on, you expect it to remain at the same level as the previous years. Then you can keep it at 0. And the data that you will find here is basically the resulting implied earning per share and diluted earning per share based on the assumptions that you've set here. Final tab is a discounted cash flow valuation. So based on certain assumptions that you can set here, like corporate tax rate, revenue growth rate for the extrapolation period, EBIT margin for the forecast period and for the extrapolation period, and so on, average cost of debt, of equity, share of debt versus share of equity funding, and long-term growth rate for the free cash flow. We can get to a weighted average cost of capital rate, which allows us to have a discount rate against which, to use to discount the free cash flows forecasts. You can manually insert the revenues that you expect for the forecast period, which is 5 years, and D&A, delta working capital, and capex as well. And then for the extrapolation period, they will be calculated based on your assumptions here, and also the EBIT margin and the taxes, the EBIT level and the taxes will be calculated based on the assumptions that you set here, and this will result in the sum basically of the present value of the free cash flows plus the present value of the terminal value. That gets us an implied valuation today.